After what we saw develop in the United States last week, the focus quickly went back on duration risk, the mismanagement of interest rate exposure, interest rate risk. And Lisa, because of that, I think given the losses you've seen in treasuries over the last 12 months, people just instantly said, well, wait a minute, what about Europe and what we've seen develop there in the last year, Lisa? Can you speak to that?
Yeah, look, I think, this is a huge wake-up call. It's a wake-up call, however, that shouldn't be a brand new thing. Understanding if you're going to own financials, if you're going to be an investor in that sector, understanding the funding model, understanding, how a bank is generating, cash flows to pay depositors and to attract depositors is a key part of your fundamental analysis. And so there's an element of this, where this is less about immediate contagion. Again, remember in the great financial crisis, there was a lot of this that was about, cross counterparty credit risk. That's not what this is about. These are about individual banks who potentially have not, were overly aggressive in funding themselves out the curve during an episode of central bank tightening. And, that is one could say, somewhat, economics 101. So I think that there may be some other mistakes out there. Yes, I do. But I do think that the systemic interconnection of them is very different than in 2008. 2007, 2008.
Just quickly, Lisa, given that perhaps you don't see the systemic relevance in the same kind of way as 2008, do you still think that it's important for the central banks to hike rates to combat inflation, to make sure that inflation doesn't get out of hand in the longer term? Or do you think that there is enough braking that it's time to pause?
Unfortunately, I have worried about central banks being late to the party on this inflation challenge. I think that if central bank credibility has a chance of being preserved, I think that the Fed especially, and then secondarily the ECB needs to continue on their tightening campaign. They need to make clear, as they have, what their intentions are, that their goal is to fight inflation, to defend the integrity of these fiat currencies, and not doing so has much longer term structural damage to the economy in terms of inflation risk premiums, overall policy term premiums, and turns into higher for longer rates over long periods of time. So, look, for the Fed, their out is that the regulatory and examinatory part of the Fed is separate from the central bank operations, open market operations. They've got to kind of stay the course, in my humble opinion. And I think to do anything else at this juncture, at least, would really be a misstep.